Welcome to Bitcoin Escape Plan. Bitcoin is at a crossroads right now, and the only dangerous decision you can make is being certain about which direction the price is going. In today's video, I will go over my baseline assumption of where the price is going to continue to go over the course of the year, backdated with historical analysis of why I believe that. Later on in the video, I will do the inverse of that, actually showing what could break that, what could actually allow for new all-time highs this year. That'll be later on in the video. Make sure you watch towards the end. And then as always, I like to start off these videos with the 4-hour analysis so we really know what's coming up next for us with the price of Bitcoin. And before I get into that, let's go over, check out bitcoinescapeplan.com. You can go read the newsletters over there. Got a bunch of them, of a variety of topics related to Bitcoin, as well as just Bitcoin itself. I'm going to be pausing the extra topics and just focusing on Bitcoin for a while, so go read those while you can. And of course, subscribe here on YouTube, bitcoinescapeplan.com. I'm going to be moving to 4 days a week. Sunday, Monday, Wednesday, Friday. My computer wasn't working Friday. All right, let's get into it. 4-hour analysis, Bitcoin, that's what you're here for. So what we have at the moment is we're trying to decide, was Thursday, Friday the actual bottom? Where it went to was a low of 59.9. We talked about that in yesterday's video, but I will briefly remind you, 59.9 is right within the range of the closing candles, I believe on a weekly time frame. We'll go into that later when we're going into the history of it, but I believe that's what it was. It's sort of forming as support just below and above the highest weekly closing candles of 2021. In 2021, for the monthly candles, I believe that we did break it, although you can see the actual candles closed at 62.7, which is above those closing candles on the monthly basis. I believe closing candles on a monthly basis were closer to about 61, 61.3 or something like that. Again, we'll take a look at that later on in the video when we're going over the base case historical analysis of why we believe that the price is going to go down even after it shoots up. So what we're seeing right now actually is the shooting up part of this. So we saw the 50% retracement, as is very normal in bear markets. Anyone who says otherwise is delusional. They don't understand the Bitcoin chart. Very normal for in the bear market year from the all-time high to about Q1 of the bear market year, for there to be about a 50% retracement. Oftentimes it's considerably more than that. So quite frankly, we should be a little thankful. At the moment, it looks like the price is behaving as if that was the local bottom, 59.9. And then what we're seeing now is a recovery. And you can see as I'm recording this, we actually see a lot of strength on the 4-hour SMA, which yesterday's video, we weren't really sure how it was going to react to it. We've now seen confirmation that it did break back below, but has had a strong reaction and is now just struggling at this 71.7K Fibonacci pivot. What I would anticipate is going to happen now is a little bit of chop as we determine whether or not we need to go back to, on the 4-hour, it's reading as 66, but the more important level on the higher time frames is about 63, 64, that being the actual midpoint of the all-time high. So I wouldn't be surprised if we see another sweep down to that at some point over the course of this week. But if seasonality remains the same as it has in past bear market cycles, we should see this part of the move be done by the second week of February, and then we should be moving on past it. Now that could be moving on past it right to a lower low, but at least this initial drop should be finished now, and we'll either get consolidation or a breakout back to the upside. So on the 4-hour chart in particular, there is something that would give us evidence as well, and that's this guy right here. So I talk about this a lot, the anchored VWAP. And in the history section, I can actually show you a little bit where I set this originally. But for now, let's just focus. So the anchored VWAP, I talk about this all the time. I've been talking about it since November. It's how I've known that we've been going lower since October, November. We're still below it. It is starting to arc lower. This is the upper band, the green one that I'm highlighting on the screen. Make sure you're watching, liking, and subscribing. The top one right there, that is starting to curve lower, which means it's going to continue to form resistance essentially the longer that we stay further away from it. And what we just did is we saw an interaction with the middle band, which is pretty significant. We haven't seen that I believe, at all in recent memory. Like, I don't think, yeah, like this is 2025. We didn't even come close. And my chart is skewed because I'm not currently paying for trading views. So we literally haven't touched it in the entire time that this one has been live, which I believe it goes back to like 2023-ish. So it doesn't have previous bear market data, but we can infer that a break of the upper band, because on all the higher time frames, pretty much we stay above the higher band essentially forever, and we are just barely touching the higher band to the downside. Whereas here, we spend most of our time above the upper band on the 4 hour, but actually can break below it. And we did last year, and I was talking about it last year as well, just on Threads instead of here. But now I'm talking about it here. Make sure you're subscribed. So over here, what we're going to be looking for is if we can maintain strength above that middle band there. And again, later in the video, I'll teach you how to make this for yourself if you want. The middle band, as you can see, is sitting just below the 66K pivot right there. So that's going to actually form as support, assuming we can continue to get consecutive closes above it. The longer we stay above that level, the better. As you can see, though, we did chop to get to the anchored VWAP in the first place. Like, we were chopping all through January to get there. So it very well, in fairness, we didn't touch it then. We got pretty close to touching it earlier in December as well. Didn't actually break through it. And in this particular instance, we did have a hard breakthrough and a snap back up. So if we're to interpret that as being similar to the inverse one here, where we had a sharp break above it and then a strong rejection below. So how we could potentially view what's happening now is we had a sharp break below it, and now we could have a strong rejection above. Now, for us, that's a good thing. We want the price to go up theoretically, but we need to prepare for the fact, and I'll get over this in the history portion of the video, which I can start transitioning into now. I suppose that's enough on the 4 hour. The 4 hour in particular, we're going to continue curving up for a little bit. We need to see strength at 73.8 is really like the important psychological one, but the 4 hour is reading it as 71.7 and 75.2. On the daily time frame, I believe it's 76.2. And kind of no matter how you slice it, we'll jump to the weekly time frame for this. No matter how you slice it, this is going to be viewed as a bearish week. I don't know how to break that to you gently. Like, that's reality. Unless this week in the next, 6 hours is able to get above 76.2K, it will be viewed as a bearish close and will put pressure for another retest of 64. Now, we may not get there. It may not actually have to drop that low, but if we close below the 76.2K pivot, it will put pressure on the price to need to retest 64, as I said earlier in the video, where it's quite likely that we're going to need to resweep that low at some point, probably towards the end of the second week of February, possibly into the third week. And we should have had confirmation by that time that we're going to move forward. And it actually, I do view it as a good signal that we saw that reaction to the middle band of the anchored VWAP, because it's just another tool that is giving us the same confirmation that we needed, that now temporarily we're either going to be long and strong or in consolidation mode. I think this move is temporary, and this is where I'll get into the base case of the video and the channel in general, which is I don't see anything different from previous markets at the moment. I still see it as pretty much the same thing that was happening. This is a little bit different on the weekly than the monthly, but pretty much the same thing is happening here, where we are in November, December. We are already below the weekly SMA. We make a retest in December. We continue to fail lower. In January, we have a massive drop, just like we did this year. And then in February, it's a little bit less pronounced in 2022's case, whereas currently for us, it's actually more pronounced in February and slightly less in January. Well, that's November, so actually this is January. But either way, the SMA in particular is a way sharper downtrend than we had in previous bear markets. So previous bear markets, it was kind of gradual and it took a while, whereas here it is sharp and to the downside. So to me, that does not scream that it's magically going to shoot in the other direction. That screams to me that we're going to go down for a while, that that's the actual direction of the chart. I've repeated this many, many times. I will repeat it again. What I believe is happening right now, and we will have confirmation of this by tomorrow's video. I'll be able to talk more about this. So again, check it out then. And the newsletter, go subscribe at bitcoinescapeplan.com to make sure you get that in your email. The 96K pivot, I believe, is functionally the same thing as the 48K pivot in the 2022 cycle. And what happened then was the same thing that we're seeing now, where we had an initial break above it, and then it failed below it. It stayed below it for a while, long enough for the SMA to be dragged below that key pivot point. And then by the time that the price actually interacted with the SMA, that pivot point was then functioning as resistance. So let's go take a look at that again in 2022. So in 2022, very similar circumstance where we have a peak. In our case, it was October, but we have a peak in November. It starts to break down. By November, it's already below the weekly SMA. I believe it was the same for us. It might have actually been October that we were already below it. And then we see an initial break to try and get above it. For us, that's not relevant at the moment. We're actually in the further breakdown of the cycle. And it's really this guy that I'm paying more attention to. This would be our January corollary, this reads it as 47.6, but whatever, about 48K is that pivot point. And what we saw was a continued downside consolidation pattern in January, February, until we got another break below, or a break above, temporarily above that Fibonacci pivot point before the major failure. And this is what I'm talking about. This is the cross that's important. So right here, at this point in time, we're seeing a rise back up. The SMA is still coming down, but it's still too far out where we're going to have an interaction with it. The price gets pulled down further because we recognize this as a failure of the 48K pivot, which then drags us lower towards the 31.8K pivot before a bounce higher. And then by the time we actually interact with the SMA, what is forming as resistance? The 47.6K pivot, which is again almost exactly double the 96K pivot. So I'm really expecting something very similar here, where we see again, if we close anywhere below 76.2K at 4 p.m. Los Angeles time today, which it looks like we're going to at the moment, it is a pretty historic amount that we've jumped back up from where we dropped this week. We may even close, technically right now, if we close where we are at 71.1, we would be inside of the Bollinger Band, which is not terrible. It makes it slightly less clear of a buy signal for anyone who did choose to buy the bottom. I think if you zoom out far enough, then you have to acknowledge that 60K is a great price. Based on my fundamental understanding of how the chart functions, is basically, if you buy the top, you have to wait 5 years for it to be in profit. So over here, if you bought in 2021 at the peak, it's at 67.7. It actually went to 69, but whatever. Let's call it 65 or above. Over here in 2024, that would have been the earliest that you were in profit. So that's 3 years before you're in profit. But there's still another instance where it's going to drop back below it, which is now. And for the course of the rest of this year, that's where you're still in that last little pocket where you're not going to be in profit if you happen to be a top buyer. Now, anybody else, pretty much, even at these levels, where we are now, essentially, has the same type of insulation as 40 or 50K had last cycle, where you are going to experience a period of drawdown, but it's going to be very temporary. And in this particular instance, if it holds true to my general thesis for the channel, which is that we see a bottom by Q3, Q4 of this year, it will start to trend back up in the opposite direction after that, and it will never return to these prices ever again. In my opinion, this cycle where we are now is the last time that we will ever be below 100K ever again. It may not break it again until 2027, because it's likely like we've talked about multiple times on this channel, the likely bottom is somewhere between about 39K and 50K if we actually do have more downside momentum, which is that's still what I'm assuming at the moment. I will get into later on in the video what would break that, what would actually change that. And I would love to see it. I don't think it's going to happen. So currently, that's what we're assuming, is that it's going to continue to break down into Q3, Q4 of this year, and then we'll start to see the recovery after that, the same way that we did over here. We saw a continued breakdown into the summer, and most of the move was already done by the summer. In that instance, for us, that would be most of the move being done by about July or August, which is my base case, that we'll have seen a major failure by pretty much by tax season again. March, I think, is going to be the local high in this instance. From this initial bounce, which I know I'm like mostly just being super bearish at the moment. So we do have to acknowledge that we're probably going to go back towards the 90K pivot, towards the 96K pivot. Like I do think that is what we're going to see in the short term between now and March, April. For anyone who is watching this with the intention of it's going to go lower, it will. But I do believe we're going to see a bounce back towards that general direction, even if it does take a couple weeks for that to take place. And if there is consolidation here, that's why we really want to pay attention to both the Fibonacci levels as well as the psychological levels. So the psychological level that we need to be paying attention to is 69K is the peak for 2021, the second peak. 73.8K is the peak for March of 2024. And that actually is our only instance of breaking trend. That's this guy right here, 73.8. So that's our only instance of breaking trend for price hitting a new all-time high in the halving year. That's never happened prior to that instance on the chart. So there is the possibility that we see, and I'll transition now into the possibility of a breakout to the upside instead, which again, I don't believe is the base case. They're taking forever with the crypto market structure bill. Even when they do get it passed, it doesn't go into full effect until next year, which means all of the theoretical liquidity from the stablecoins and everything else can't flow into the market until no earlier than next year. And I saw something where it may actually take until 2029. So I think that there is more pain to come than people are comfortable with. We've only seen a couple banks start to go out of business. More will come like that. More bankruptcies will happen over the course of this year. Wait till April, wait till June. Should be exciting. But our base case is still we're going to continue to drop into Q3, Q4, and then start to rise to the upside after that. Let's take an alternate look at what might happen if we actually are going to see a new all-time high this year, which again, I think is fucking bullshit, but whatever. Let's look at it. So I've talked about this in several other videos, as well as the price prediction videos. The only thing that would give me confidence that that is possible is we see it close now above 76.2K between now and 4 p.m. Los Angeles time. Probably not going to happen, whatever. That would be a great domino in this theoretical equation of, getting everything that we want of a new all-time high. So even if that doesn't happen, even say we consolidate here for a little bit, what we would want to see is, again, by the time that happens, any close at below 76.2K is going to keep that weekly SMA dropping lower, period. It could flatten out if we're higher than that, but really we would need to be higher than about 87.2K for it to potentially flatten out instead of continue to drop. And even really then it's like it needs to be in the mid 90s for it to guarantee that it would curve instead of continuing to drop. So it's most likely that we are going to experience a little bit of resistance at that SMA that we can very well break through, but then we're going to have to break through the 96K pivot. And in this scenario, this example, we break right through it. What's next? So what's next is the psychological level. The psychological level is what? 100K. So 100K, the psychological levels are every bit as important as what the chart is actually telling you. So, if you were lucky enough to have shorted right here at 98 where we just went there, you would have done so on the assumption that we were going to fail an attempt at 100. That was the rationale, was that we were not going to get to 100 at this particular instance. And my opinion is that we are not going to get 100 for the rest of the year. We for the rest of 2026, Bitcoin will be below 100K, period. I know, I'm sorry. I keep going back to what I really believe is going to happen. So let's continue with the theoretical, if that's not what's going to happen, which is we see strength at the 96K pivot after a reclaim of the weekly SMA. So then we are above the weekly SMA again, like over here after recovering it, which again, this is in the fucking bear market year, so it's not going to happen. Whatever. We can keep fantasizing. So we have strength above 96K pivot. We have strength at the 100K level. And if we look at the volume profile real quick, we need a ton of volume to return between about 99 and 101, or the price is just going to get hammered to the downside because all of these people are going to realize, all right, you know what? I'm going to take out my profits. I don't really like how the markets are moving. I like how gold and real estate and everything else is still going up. They're not going to put it in Bitcoin right now. It doesn't make sense. It's the easiest one to take money out of, and they can put money into it later, but they're not going to. The volume just does not speak to a ton of people being at higher prices than this, which means the higher we get, the more these people are going to be willing to accept a loss. That's reality. So let's ignore reality. So we're at 100K. We've broken through 100K. What's the next most important level? 106.8K. I've talked about that a million times on this channel. I was really holding hope in November, December that we were going to be able to see a rise to that level, and it's not reality. The reality is that the pivot we're actually going to need to see a reaction to is 96K, and the longer it takes us to get there, the more likely that it's actually the 76.2K pivot. I do think it's the 96K one that will actually show us when we rise back to that and fail it. That's going to be 2 breaks where we failed 100. And that'll be enough for the market to really flood in the opposite direction. And then these levels that we just saw here are going to be tissue paper. We're going to be dropping down to the high 50s and staying there instead of just wicking to it and coming right back. So in this theoretical scenario where we see an all-time high, that would need to happen like so violently quickly. Basically by July, we would need to be, by March, April, we would need to show strength at 96K. Going into May, June, July, we would need to consolidate above 96K and show strength above 100, even if it does take us a little bit of time to make sure that we're filling out the profile between 99 and 101, like I said. If we can do that by the middle of the summer and have enough momentum where 106.8K is we're comfortably holding that, then I can see the argument for new all-time highs going into the end of the year when stocks and everything else will likely have a blow-off top. I think that stocks are going to experience the blow-off top that Bitcoin did not. I am still of the opinion that gold is going to continue to rise throughout this whole progression of stocks and real estate. Until stocks and real estate have fully bottomed, I believe that gold will continue to go up. I will update that analysis over time. But that's what we would be looking for in this theoretical hopium version where the price is going to go way higher, is it would need to be above 96K by no later than the end of March. It would need to be comfortably above 100 and possibly 106.8K by about June, July. And that would give it permission to make another push later in the year. I would be very surprised if it's able to do that earlier. It's very likely that August and September will be downside pressure, and I would expect it to be much lower. I would expect it to be below the 64K pivot, even potentially below 50K at that point. But in this hypothetical scenario where the price is going in the opposite direction, where Trump is giving out $2,000 to everybody in the fucking planet, and the stable coins have launched early and they're pumping the markets full of liquidity, it is possible as long as we are above 106.7K around July. Then I can believe it. If there's actually enough hopium and craziness in the market, that it'll pump it up till that. I don't believe that that's going to happen just because where does it go? Where does it go after that? Do all of the people who bought in here just not take profits? Or do they miss out? They miss out on an opportunity to buy more? Do all of the multi-billionaires in Bitcoin who sold up here just miss out on their opportunity to get back in? Or is it likely that we're going to see some of them have bought at the end of this year? I think it's more likely that we're going to see some of them rebuying at the end of this year, to the tune of, again, multiple of these people moved like $4 billion, $10 billion without needing to ask permission to do that. I mean, I'm sure that they, in a lot of cases, were working with someone in order to custody it properly for that amount of Bitcoin. Like, that's crazy. But a lot of them are moving it in a single transaction, which is insane to have that much faith to buy Bitcoin initially, hold it for 10 years, and then sell it and not even do a test transaction. Is insane. The balls on that individual. But that's what we would need to see, is basically by June, July, we would need to see strength above 106.8K. And that would give us permission for another pump into the end of the year. But, who does that really benefit? I mean, technically it benefits Bitcoin holders, I guess, but not really. Like, it actually benefits you more for us to see the full bear market progression, because then even if you're somebody who bought between 90 and 100K last year and now you're stressed because you're not in profit anymore, prices at 60 and 70K should not be horrible to you. That should be something that you're excited about. It gives you an opportunity to increase the Satoshi value of your portfolio. Sure, the US dollar value of your portfolio has gone down temporarily, but like, this is Bitcoin escape plan. It's not fiat escape plan. We don't want to build more fiat to stay in fiat. We want to have more Satoshis, to have more exposure, so that we're protected against continued deflation of assets over time. Because sure, you have stock in a company, but they can just print more shares. They cannot make more Bitcoin. So in that future where JP Morgan Chase and all of these other banks are going to want hard backed collateral that you can give them in exchange for secured loans, they're going to want things like Bitcoin. That is the point. It doesn't matter what the dollar price is. It matters that you could make a deal with local businesses where you pay them once a year in Bitcoin and get more favorable terms for your agreement than just continuing to pay them cash or with credit or whatever. Once people really understand how this thing functions, the world and how we interact with each other financially will shift, and it'll continue to shift in that direction. So what makes sense for you is not to dump every dollar that you make into Bitcoin, unless you have no expenses, in which case, dope. That's fucking sick. But for most of us, you've got a job. You have a defined amount of money that you can put towards assets and investing in general, separate from your job, your wife, your dog, your health care, whatever the fuck. You know what I mean? There's only so much effort that you can put towards this asset. So what we focus on this channel is just actually getting solvent analysis. It's just getting good analysis so we have a reasonable expectation of what is going to happen with the chart. And at the moment, that is downside pressure. I do believe that we see a rise back again into March towards 96K. I would imagine we're going to fail that pivot, and it is going to drop back down in the opposite direction later. We will see one last little spike up in July, but at the moment, with the general shape of the chart, I would assume that spike up in July is going to be closer to 76.2 or 80K, as opposed to another move at 96 or a move higher at 100. I would be very surprised. Maybe something about the crypto market structure bill enables people to be excited enough for that to pump harder, but I don't think we're going to see 100K again this year. I don't think we see 100K again until sometime next year. I don't know exactly when next year, probably by the midpoint or later, I guess, depending on like how quickly liquidity actually flows into the stablecoins. And I would imagine it's going to be fairly quick because banks will be wanting to compete with each other to have their customers use like as many of the stablecoins as possible. So same as the ETFs, where it really benefited the issuers to be early and just to get their clients to be buying a portion of the funds. It's going to be the same with the stablecoins, where they really will be incentivized to have you spend a fuckload of money on new things that you normally would have had to pay a hefty fee for, and now you don't because of the stablecoins. So that's what I think is coming for next year. That will pump the price. one of the easiest places for people to put their money from those stable coins is still going to be Bitcoin. I do think